Hey, what's going on, everyone? In today's video, we're going to talk a little bit about ROIs or return on investments, specifically about AMC stock. Now, I know I've done this video in the past with other stocks. We're just going to be focusing about AMC today, and I know I haven't posted for about 2 months, I'd say now. However, there really is no need for that much repetitiveness, especially considering that the market has been on an overall downtrend, right? When you just have someone saying that the market's going to go down, AMC is going to go down, a lot of other equities and stocks are going to go down, doesn't help out the situation, considering that so many people right now are net long, not net short. The whole situation probably isn't going to change until some of the macroeconomic levels start shifting and changing again, right? Until we have that inflection point. But with inflation, with the gas prices, and even with grocery prices right now, I'm sure you guys understand that everything seems to be getting higher and higher. The real question is, when will inflation peak? But that's not the purpose of today's video. So let's just talk about the parameters for today's video. Investing $250 per month, or I should say at the end of each month for AMC. What can really happen and what will happen, right? With some more parameters that I'll talk about in just a bit. So before we continue, the only math that we're going to need is recursion and operational mathematics. And I'm talking about addition, subtraction, multiplication, and also division, right? With exponents, etc., etc. I also should mention that we're going to be depositing our money at the end of every single month, not the beginning, and we're not going to start out with any money. We're just starting out with $0, and again, depositing $250 at the end of each month. And so, what is the annual rate that we're going to get out of AMC stock? We're going to be conservative for today's video, and we're going to say 12%. A 12% annual rate of return for AMC, and considering that right now AMC is at, I'd say, $14 to $15. If it's even lower, then I would say that's even better. Because right now you have people like Ray Dalio who are adding AMC stock in their portfolio, right? And so if you have people like that who are amazing investors adding AMC into their portfolio, a 12% return, in my opinion, I don't think that they're waiting or hoping for just a 12% return, considering that the stock is, $12, $14, $15, because that would be an additional $1.2 added, $1.5, et cetera, right? Considering that, again, AMC went up about $30 or even higher in a span of just 1 year or less than that, right? So again, this is conservative, I would say. And on that note as well, right, I think it's important to add that there's going to be a lot of generational wealth created within these next few months and also next 1 to 2 years, right? Going out until all the way 2024. So enough talking, let's go ahead and start talking about the numbers. So at the end of year one, we should be at $3,191.63. So very quickly, before we go on to year two, year three, year four, year five, all the way out to year 15, I want to explain the math real quick, just for the first 2 months, okay? So what's going to happen at the end of January, right? So we got January right here. For those of you guys that were wondering, we're going to take our initial principal, right, $250, that's how much you're depositing at the end of this month, and we're going to multiply this by our rate, 1.12. And the reason why it's not 0.12 is because we really just want to find the total, okay? We don't want to find the interest and then add it back to our initial principal, okay? We don't want that. And then remember, because this is on a monthly basis, we're going to raise the rate to the power of 1/12 because this is on a monthly basis and, there are 12 months in a year, so this is just 1 month out of the 12. And then once we do that, it should equal to $252, about $252.37. But you guys get the point, right? So then we go on to February. And so February, at the end of February, I should say, we also have this entire function, right? We have all of this, so I'm just going to repeat that. And this is, again, a recursive process. It just keeps on getting repeated and repeated. So again, I'm just going to add all of this, the same as the original function for January. And then I'm going to add another 250 because this is going to represent what we added at the end of February, right? So end of February is right here, this contribution. And then I'm going to multiply this new function all by the same thing, right? 1.12. And so I'm going to add that right here. This is our rate. And then we're going to raise this to the 1/12 power because this is just for the month of February. Just for the month of February. So that is, again, 1 month out of the 1 year, so 1/12. And so this should output $507 and about 14 cents, right? So 507.14. And that's going to be the end of February. So hopefully you guys kind of understand what we're doing here because I feel like that'll help some people better understand really the power of compound interest, right? So let's go on to year two now, right? So what is going to happen at the end of year two? We should have about $6,766.25 just by adding that $250 at the end of each month with an annualized return rate of 12%. Okay, now what's going to happen at the end of year 3? The end of year 3 should output about $10,770. And then if we continue on to year 4, let me just erase this real quickly. Year 4 should give us about $15,253.81. And then last but not least, we've got the end of year 5, which should total $20,275.87. Now, this is quite a considerable difference, because we started from about $3,200 and then going all the way to $20,000, almost $300, in just a matter of a few years, right? And what's really important, again, I know I keep on repeating this, but this 12%, because some years are going to underperform, some years are going to overperform or outperform. Predicting how much AMC will return this year or even next year or the year after that, really, who knows? But it's just got to be at least $1.50 higher than what it currently is at. What happens if it returns $3 in a matter of a year, right? What if it goes $3 higher in 1 year? That's something to also consider, because some people think that is too low. And what if it goes higher, right? What if that number was higher? Well, then these numbers would also be different. And if AMC underperformed and was actually, let's say in 1 year it went up only 8% higher or 5%, 3%, whatever the number may be, then these numbers would be lower as well. So let's go on to the next 5 years, right? All the way to year 10. Starting from year 6, we have the end of year 6, I should say. We've got $25,900.62. And then the end of year 7, we've got $32,200.32. So going from 25, almost 26,000 to 32,000 in just a matter of 1 year. And then end of year 8, we are going to be at almost $40,000, $39,255.97. And then we go on to year 9, which is going to be $47,158.30. And then year 10, when you look at that, basically $56,000. So we've got another jump all the way from 25,000, almost 26,000, let's just say 26,000 to $56,000 right there, right? And so let's go on to the next chart. So over here, we've got the end of year 11 now. And so compounded at a 12% rate per year, almost $66,000 at the end of year 11. And if we actually compare this to the last chart, right? End of year 10, we were at 56,000. End of year 11, again, we were at 65,000, almost 66. And then what is going to happen at the end of year 12? We've got $77,000. And end of year 13, almost $90,000 right there. End of year 14, we've just now hit 6 figures, so $103,384.98. And this number is going to be even higher than the number in the thumbnail. So end of year 15, we have got $118,982.80. Some people may think that this number is too low. Some people may think that this number is too high. Just remember that it is going to change based on not only how much it's getting compounded per year, so whatever the rate may be, but also how many years you invest. The number of years is also very important, and also how much you contribute to the account. Remember, we're at $250. Some people, they would rather go to $50 or maybe $100 or maybe even higher. Maybe they want to go to $300, $500, etc., etc. You guys understand the point. So we've got the number of years, we've got the contributions, and then we've got the return rate. And with that being said, everyone, thanks again for watching, and I'll see you guys in the next video.